Hello, Koh Chiep Yeo. I hope I pronounced that right. I'm going to call you Koh from now, K-O-H, from questions from YouTube. Two separate questions, if you like. I do recommend them. I appreciate everyone doing them. I would say in this case, I think I've covered most of it, Koh, in previous videos, but having said that, it never hurts to go over stuff again. So your first question was about entries on breakouts or pullbacks. Well, I never trade breakouts per se. I'm always trading trends, and I've pulled out this cut chart because I was looking for a possible short earlier, because CAD was right up here under 2 strength wise, and JPY was down here at 7.4 or whatever. So I was looking for a sell, but I don't like to enter too far away from the hourly 8 EMA. So I want to be entering a reversal, 3-bar reversal somewhere around here with the crossover or here. But to answer your precise question, even if I'm down here, say for example, I'm not trading a breakout, I am trading a trend reversal. So low high, we call this lower higher low, but it's not. But this whole bar here was the reversal trend. So I'd prefer to see something like this: low high higher low higher high, high low lower high lower low, and break. Now you could call that a breakout of that level there. It's not. It's a trend reversal after a pullback. So and the point being, you then want to see a pullback on the lower time frame, and then you use you double check everything. It's like I say, it's a Russian doll effect. You could be entering this M30 using a 1 minute entry. We're not going to get it on this example here because the pullback didn't come far enough, because basically it looks like this candle, because this one broke a number of candles here and something over on the left hand side. If we just use our most recent example there, that's the reversal and close. So that isn't a breakout, that's a trend entry, and you don't have to put the stop up there because we've broken support, so it should be tested as resistance, which is what that candle has done effectively there. We're not going to get a very clear example, but the point being, if I went down onto, let's just go straight down to the 5 minute, say for example, hopefully we'll see some sort of pullback after. There's the tiny pullback I just talked about. So you could go on the 1 minute and effectively you could treat this as the pullback: low high higher low higher high, high low lower high lower low, and when it closes below that candle there, whoops, why hasn't it dragged that over there, that is your new reversal. In fact, I think that was the actual candle that broke and closed there. I don't want to make this video too long, so I'm sort of skipping stuff, but the low of that is 526 and the close of that one was 525. Yeah, that was the break and close. So we had a tiny minuscule pullback, but really and truthfully, all you've got to do is put your stop based on the 1 minute. So if we use this swing here, high low lower high lower low, old support broken is where the price will most likely go and test. So any of these support levels here, so as you can see, you know, the price broke down there and then came back tiny. That's why you will never see me have much drawdown, because you're using an H1 reversal, finding that to trade, and then you're going right down to the 5 minute or even 1 minute chart to make your entry, and as such your stop should be related to the 5 or 1 minute, not the hourly. I hope that makes sense. So, because the reason for that is because every time this pulls back, buyers are being exhausted. There are no more buyers, and then when it comes down and it has another pullback, the buyers are being exhausted again. It's sellers coming into the market. So if you've got exhaustion on a sell trade, how far can the stop go back? There's just no one there prepared to buy it. Okay, the big boys, the dealers, the institutions could spike up against you, but history tells me they don't. So we don't enter breakouts. There's no such thing as a breakout in what I do. It's all about pullbacks and then trend continuations. Okay, and we're trading Russian dolls, remember? So even if you had a daily reversal, effectively you'd still be entering on the 5 minute, and you should use the 5 minute as your stop loss. Okay, be sensible. You know, if you do a search for stop losses or stops or something like that on YouTube, you'll find a video or two devoted to it. Okay, so that's your first question. The second question, you mentioned reward, risk and so on and so forth, and where to put your take profits. Have a look at my line videos. In fact, I even made one today, I think, the Aussie dollar chuff long, Swiss franc long. I take what the charts are prepared to give me. So when I draw my lines, my levels, or you may be able to see them obviously on an H4 chart or something and just say, right, I'm going to trade to that H4 support level below me. And if it's 4 pips away, I'll take the 4 pips and I'm happy, because I know there is highly likely to be a bounce there. If it's 15 pips, my gaps, that's why I talk about trading the gaps. If I have a 15 pip gap, I'll take 13 pips out of it and make sure my spread is covered. I rarely go to extremes unless I know price has been exhausted, as I say, and the only way in a short trade is down and down fast. In a long trade is up and up fast, and then I'll adjust my targets accordingly. Okay, so we're trading gaps. Take what the charts are prepared to give. I have never been a believer of calculating reward risk, ever. I traded when I was a youngster in this, a newbie, with a scalper, and he used to make $1,000 on 2 pip scalps, Aussie dollars they were. And it's all about your hit rate. And this method of mine is all about building your hit rate up to the 90s, high 90s. And it's all about discipline and following a plan, making your plan. You know, I think I've made 2 or 3 really quite good videos explaining exactly where I take profits, why I take profits, and how I devise my targets. Not so much talk about stops, but you can take it as read, as I've just described. Stops are related to your entry time frame because the price is exhausted. By the time you've watched the price confirm down, pull back, then give you say you started on the hourly, then you go to the 30 minute, then you go to the 15 minute, then you go to the 5 minute, then you go to the 1 minute. By the time you get to the 1 minute, the hourly that gave you your first indication to take the trade, all of the buyers in a short trade are gone, and you've just got the little leftovers on the 1 minute. I hope that makes sense. Add to that your histo alert for the momentum of the move, and you can see why the price moves like it does. I mean, there was a great example on GJ today. I forget what time frame it was, but the price comped down and then just took off something like this. There's your reversal: low, high, high, low, high, 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 low, high, low, high, low, lower, high, lower, low. And there was just nothing left in the pot because all the buyers had been cleared out of the market over here. That's what I'm trying to describe. Once there's nothing left to buy, price will just collapse, and that's why the RSI histo is so good for us. Any other questions, Co? please ask. If nothing of this was clear, I'll try and clarify things. Be precise with your questions, what wasn't clear, and then I can concentrate on that part of the answer. Okay, thanks for watching. I think this is my last video for the day today. It is now 20 past 6. I had no sleep because of my dog last night, but thankfully she's staging a remarkable recovery at the moment, but I don't want to jinx it, so I'm just going to thank my lucky stars she's still with me. Thanks for watching. Have a great day. Don't forget, like and subscribe if you like the sound of what I'm doing here. Thanks for watching. Bye for now.